Let's take a look at this PowerPoint. The PowerPoint is set up in the Content tab, so you can look at it without this video if you like. This is going to just go through the steps on creating a company, and I've broken it up into two PowerPoints. This first one is the basics of getting set up, and then the second one goes through the finishing of setting up your chart of accounts, etc. Okay, so first step is that you need to create a shell of a company within QuickBooks. This is the same first setup in Sage 50 as well, that you have to create this shell of a company, and then we're going to put all this data, all these transactions are going to be loaded into that shell, but we have to create the shell first. All right, so you're going to open QuickBooks by clicking on your QuickBooks icon, and you'll come to a box that has some companies that you've already worked on, and if you want to use one of those, then you would just click on that. But if you already worked on one of those the last time that you were in QuickBooks, then that existing company that you worked on last is going to show up. It's going to just come all right up into the screen. So you're going to have to go into File, which is up in your left-hand corner, and then say Close, and that'll close that old company out so that you can start this new company. Okay, it won't delete the old company, it just gets it off the screen. Then you'll see the box, and down on the lower left corner of the box, it'll have a button that says Create New Company, and you'll click on that. Then it'll give you two options. You can do the quick express start, or you can do the detailed start. The detailed start sounds like it'll take a lot more time, but in the end, the detailed start will take you much less time. So do not do the express start. Just do the detailed start. In the long run, it will save you a bunch of time. Okay, what you're going to put in at a minimum on that first box is the company name, and then you can click Next. It's going to ask you to choose an industry. There's all bunch of different specific types of industries, so you could, in real life, pick one that matches the kind of industry, the kind of business that you have. Now, for most of our projects, you can either choose this general product-based business or general service-based business. Most of our projects are actually product-based businesses. The very first one is a service, so if you wanted to use general service-based business for the first project, but most of the rest of the ones, and you can even say product even on the first one if you wanted to, okay? And then you'll click Next. On the next screen, it asks you to choose an organizational structure. So that means like a sole proprietor, a partnership, or a corporation type of thing. And most of our projects are where it's a sole proprietor and it has a capital account. So on the project, it gives you a chart of accounts, and if you see there's a capital account, then you know it's a sole proprietor. If it has common stock and retained earnings in it, then you know it's a corporation. None of your projects are partnerships. Okay, the software will set up, so once you choose one of those, then the software will set up the company shell, and it will be saved to the hard drive of the computer that you're working at. Then you'll go on to the next screen, and you have to put in the date of the fiscal year. The first month of the fiscal year. So if it's a sole proprietor, by law, must use January 1st to December 31st as its fiscal year. The fiscal year is like the accounting year, and it doesn't have to be the same as the calendar year if you're a corporation. You can have a different fiscal year, such as March 1st to February 28th or June 1st to May 31st. So if you're putting in a corporation, you have to know what is the fiscal year. And then you're going to put in the first month of the fiscal year, whether that's March or June or August, whatever. Okay? So that's not the same as the transactions. So when you get your project printed out, it's usually a Word document. It'll have the transactions on there, and maybe the transactions are for September, but that doesn't mean the fiscal year starts in September. So you have to know when is the fiscal year. Again, if it's a sole proprietor, the first month of the fiscal year is January 1st. Okay, that's this whole thing here. Doesn't matter when the transactions are. You need to put in January for the beginning of the fiscal year. Only if you have a corporation, then you'll have to look in the instructions of the project to see when the fiscal year starts. And again, that's not necessarily when the transactions are for. Okay, the next screen you come to asks about an administrator password. If you're going to be working on one of the college computers, or you're working on a computer where other people are in and out of there, that you don't want them getting into your QuickBooks company, then you can go ahead and make up an administrator password that only you know, and go ahead and press next. If you're the only one on your laptop, you don't really need this. These are fictitious companies. Now, if this were a real company, of course, you would have an administrative password. You want to take care of any of your financial information. But this is just fictitious companies that we're working with, so you don't need an administrator password, so you can just ignore the screen and still just press next. Okay? The next screen, you press next again. Give a name you want for the file and press save. It is now saving the company shell onto the hard drive. And you click next. Okay, so now we've moved out of creating the shell and into step 2, which is answering questions. You will be asked a series of questions as to which features you need for this company. This is the section that is not on the Express Start, but then you have to go back in and change all this stuff later if you do Express Start. It causes a bunch of problems. So do the Detail Start and go through these questions. And I'm telling you what to say. The first one is sales tax. Does your company do sales tax? So anytime we have sales of products, you're normally going to have a sales tax. So you can say yes for project 3 and project 4. Otherwise, you probably don't need sales tax set up for you. So you can say no on the other projects. Estimates. This is like if you are an auto repair place and you need to give an official estimate to a customer. Well, none of our fictitious project companies need estimates, so you can just say no. Statements means, are we giving invoice statements, statements of how much each customer owes to that customer at the end of each month? And no, we don't need that either, so for any of our projects. Invoices, yes, we do need invoices except for the very first project. And project 6, we don't need invoices for that either. Progress billing, that happens like if you're maybe a contractor or something. A lot of times what they do is the customer has to put up some money up front, and then they do some work on it, and then the customer has to pay some more money, and then they do some more work, that kind of thing. And so they get billed along and along instead of getting billed either ahead of time for the whole amount or after the whole thing is done. So we do not need progress billing in any of our projects. Keep track of bills. Yes, we want to keep track of, when the vendors and suppliers hand us a bill, we got to keep track of it so we can pay it on time, and they keep sending us inventory. Okay, keep track of time. Now, this might be, in fact, in an accounting office or a law office or something where everybody that works in that office on that particular client's file has to keep track of how much time they put in on that file. And whether you're the person making copies at the copy machine or you're the person actually doing the tax return, it doesn't matter. We have to keep track of everybody and how much time they put on that particular client. Now, we do have some homework that we're going to do time tracking on, but none of our projects require time tracking, so you can say no for that. Employees, project 4, we might do something with employees there. In the past, it's been a little difficult because we have the educational version of QuickBooks, so a lot of times that makes it more difficult to do payroll in QuickBooks. In the real QuickBooks, where you pay for the software, then payroll is very easy, and if we had employees, which Project 4 does have employees, so but we may have to go around that. Okay, so normally you'll be saying no to employees. All right, once you've gotten through all those yes and no questions, you're going to select a date to start. This is what month are the transactions. So remember, before we talked about the fiscal year, but this is the actual transaction. So if your project has transactions in September, you're going to put in September 1st. If yours has transactions for June, then you'll put in June 1st. The next screen you're going to come to shows suggested income or revenue accounts and cost of goods sold accounts and expense accounts. They're not going to show you any assets or liabilities or owner equity accounts, just the revenue and expense accounts, and cost of goods sold is a type of expense account. Okay, so your best bet here is to figure out, to look at your chart of account that's listed on your project and see how many income accounts do you need. Okay, now these GL software packages often do not have contra accounts, but you may see those in QuickBooks, sales returns and allowances, or sales discounts. If you see that and you need it, go ahead and click on it. If you don't see one, then just click on any income account and then we can change the name. Okay, so if you have two different sales accounts, like Project 3 has sales of products and also boarding income. And so there's two basically revenue accounts that are main revenue accounts. So you would click on two of the income accounts that show up on the screen, even though they don't say the exact same thing. We can change the name of them later, okay? But at least we'll have two income accounts already set up for us. Again, if you need two cost of goods sold accounts, then you make sure that two are checked and go ahead and uncheck the rest. If you only need one cost of goods sold account, then just check one. Okay, if you don't need any, then, uncheck everything. If you need 5 operating expense accounts, these are like wages expense, rent expense, utilities expense, etc. If you need 5 of those are on your project chart of accounts, then click on the 5 that you see that are closest in name to what you need. And then we can change the name. So if it says electricity expense on there and your chart of accounts says utilities expense, that's the same thing. So just click on the electricity expense, and then later we can change the name to utilities expense. In the end, you want the chart of accounts on QuickBooks to match the chart of accounts that you have on the project listing. All right, you want to also uncheck the Ask My Accountant account. That's at the very bottom of the list of expense accounts. When you get to it, just uncheck that. In real life, that is a helpful account. It means that anything you don't know what to do with, you're going to stick it in that Ask My Accountant account. And then when your accountant comes maybe once every 3 months to do things, or even if it's just might be once a year, then those oddball things you didn't know what to do with are down in there. Or you could call the accountant and say, these are the 3 things I stuck in this month in the Ask My Accountant account, and I have no idea what to do with them. Okay, so in real life, that's real helpful. With our projects, we don't need that. Okay, so you can uncheck it. All right. Now we move on to step 3, and that's the initial setup. So there will be a button that says Go to Setup, and you'll click on that button, and you'll see where you have a chance to add customers, vendors, and employees. Okay, and you're going to click on the Add button for adding people we do business with, which includes the customers, vendors, and employees. And then you'll get a big box where it says customer, vendor, employee, or other. Those will be columns, and there'll be a little thing to bubble in, whichever it is. So if you have 2 customers and 3 vendors, you'll bubble in customer and put in that information. And once you get the 2 customers in, then you'll bubble in vendor for the next 3 and put those in. Okay. Other you could use for the owner, like for owner withdrawal. Okay, so the first name box is our code name. So if you have ABC Company Incorporated is the exact name of that vendor, you could just put ABC for the code name. That makes it a little easier. Then when you get to the second name box, that's the real name, and you need that spelled correctly, because that's how it's going to come up like on the invoices that we do and stuff. So you don't want the vendor to see the name all in little letters, to see the name misspelled. Okay, that is not good. So on the second name box, you would type out ABC, all capitalized, company, the whole company word, at comma, Inc., I-N-C, dot. Okay, so, and the same thing with customers. The first name box is whatever code you want to put in. The second name box is the exact, correctly spelled name of that customer. Once you have your customers and vendors added, you'll come to a screen that says you successfully added them. In the lower left corner of that screen, it'll have a button that says Enter Opening Balances, or maybe it's just a link, and you need to click on that. Then you're going to put in the vendor and customer opening balances for each one, along with the date the invoice was from for that vendor or customer. For the first project, you don't have any opening balances, so you're good to go there. But for Project 2, you do have some opening balances. You have a vendor that we owe money to as of the first day of our transactions. So you'll have to click on there and go into that vendor and put in the date from the invoice that we owed money on, and from that date and the amount that you'll have to put in. Now, once you got those in, then these opening balances will automatically put in to accounts receivable for the customers, accounts payable for the vendors. So if I have one vendor that we owe $2,000 to, I put in that vendor, and then I click on enter opening balances. I put in that old invoice where we owe to the $2,000, put in the amount and the date, and once I close out of that, the QuickBooks will now set up an account called accounts payable, and it'll put the $2,000 in there in the general ledger, as well as the accounts payable subsidiary ledger under that vendor's name will also show the $2,000. So all our ledgers will be set up, and you'll have an account called accounts payable automatically set up. Same thing for accounts receivable. If you have an opening balance, it's automatically going to set up accounts receivable and an accounts receivable subsidiary ledger, and it'll put the same amount in both of those so everything will match. Okay, then you'll get back to that ad screen, and there's a place to put products and services that you want to set up. So for like project 2 and 3, you can put in just one and call it non-inventory part with a general name. So project 2, we're a bookstore, and so you can just put the word books. We're not going to keep track. These companies in project 2 and 3 are on the periodic inventory system. They're not tracking each individual inventory item. So we can just put it in just as books and just leave it like that. For project 4, you're going to have actual separate inventory items that we're going to keep track of. So we're going to be on the perpetual inventory system and keeping track of each inventory. So yes, you'll have to get in here and actually put in inventory parts for each inventory item that you have. Okay, once you get done with those, you're back at the ad screen, and the final thing is your cash account, or in other words, your checking account. Cash is what accountants use as the account name for the regular checking account. Now, you may have more than one checking account. You might have a checking account for the regular accounts payable checks that are going out, and a separate payroll checking account. You might have a savings account, some kind of investment checking account. You might have a number of different bank accounts. So this is your chance to put in all your bank accounts. A lot of our projects only have one bank account, and it's called cash, and it'll be the regular checking account. So you can call it cash or you can call it checking account when you go to put it in there. It will give you an opportunity to put in the beginning opening balance of that checking account, and along with the date. So you can, if you have a beginning balance in there from your project instructions, you can put that in there, and the date that you're going to use is the date of the post-closing trial balance that's on your project instructions. Or if you don't have a post-closing trial balance, some of them don't, then use the date of the last day of the month before the transactions. So if the transactions are in June, you're going to use the last day of the month before the transactions. So the month before the transactions of June are May, and the last day of May is May 31st. If you forget to add some things, like you forget to add one of the vendors or something, it's fine. You can add them later. This initial setup just saves you time down the road. Okay? And it is helpful to have all the vendors, all the customers, and everything, especially if they have opening balances. Okay? Then it's very helpful to have all of them set up before you start putting transactions in. Okay, but they don't have to be done during this initial setup. We can still add them later. We can even add them if they don't have an opening balance. We can even add them after we started doing transactions. But it's far easier to get them all done ahead of time. Once you're done with this initial setup, there will be a button that says Start Working. You're going to click on that. Everything you have done is saved on the hard drive automatically. As you go along, each thing you click on is automatically saved to the hard drive. If you want it saved on your flash drive, your USB drive, you will need to do a backup process. And there's a separate PowerPoint showing you, or video showing you, how to do a backup and a restore if you have a USB drive. Okay, your next steps are to set up the company preferences and fix the chart of accounts, and this will be on the following PowerPoint show and video.